All right, listen up, guys. Wanted to share some good news with you. If you are a first-time homebuyer or plan to be here in the near future, in May 1st, Fannie Mae and Freddie Mac are announcing some pretty big changes to their loan level price adjustments, meaning that in certain categories, you're going to see a big improvement if you're, in most cases, a first-time home buyer who's putting down a low down payment, even if you still don't have a perfect credit score. It can be as little as 620 and above. So in that category, you're going to see that your rates have improved in that area. So that's great news. So if you're looking to buy, like I said, this can really help you with your affordability. And in a market right now where it's softening a bit and prices are starting to stabilize and even in some places come down, you're going to be in a position where you're going to be much, much more likely to buy a home than where you were at just a year ago, where it was crazy, where the lines were out the door and people couldn't, get into a house and they had to bid way over. That's not what's going on now. So if you're a first-time home buyer, like I said, you want to understand how this can affect you in a positive way. There is a chart that will kind of show the differences. Now, on the other end of the spectrum, the not so good news is that Fannie Mae and Freddie Mac, they made loan level pricing improvements for those first-time home buyers that have low down payments and lesser credit scores, but they actually slightly penalized people who had higher credit scores and were putting down more. So that part really didn't make sense. There's a lot of uptick and uproar about changing this. But again, if you are a first-time home buyer, you're in good shape. The other thing that they've done is that they've made an adjustment to the people's rate based on your debt to income ratio, which means that that's the percentage of your debt versus your income. So there used to not be anything like this. So it's very important that if you're looking to buy a home, whether you're a first-time home buyer or a seasoned buyer, that you have your income checked by an underwriter before you move forward on a property and you know exactly how much loan you can afford. Because if that's not exact, your rate and your cost for your rate could go up. So make sure you plan with your mortgage advisor accordingly in that sense. But wanted to share the good news and maybe not some good news. But I hope it helps you. And if you have any questions, feel free to reach out anytime.